Good morning. This is Sheldon here from the Currency Advisory Desk. Well, yesterday we saw the rupee close lower against the dollar. It closed 0.74% against the US dollar. This was primarily due to the fall in equity markets. We saw Infosys, which came out with its results yesterday, which was not taken in a positive note by the markets that is. So, which is why the rupee gave up its gains, and it closed at around 55.93 yesterday. Now we also had the Indian IIP number which came out. Even though this showed some signs of recovery, and the figure for May came out at 2.4%. This was not sufficient for any sort of upward move for the rupee. It was not sufficient to provide any support for the rupee, that is. We are expecting further pressure to be persistent on the rupee, primarily because of the weaker corporate results that will be coming out in the coming few days, and we expect the dollar to remain bullish, and we advise to buy at current levels, probably for a upward move of around 56 in the near term. Now the dollar index also is strong. We see that it's at 83.59. For the past couple of trading sessions, the dollar index is holding at 83 against all of its 6 major trading pairs, that is. So the strength in dollar as well as the weakness in rupee due to the domestic factors, domestic results that are out, this will add a lot of pressure on the rupee, and we see the dollar to move up from here. Moving to the euro. Well, the euro industrial production rose yesterday by 0.6% for the month of May. However, even this was not sufficient to provide any sort of support for the euro, and we saw the euro weaken against the dollar. The important support level at 1.22 against the dollar was broken yesterday. It went to 1.2175. Now this was a very psychological number, 1.22. Now we see it to weaken further, probably go to around 1.20 levels. However, in Indian terms, for the immediate trading pattern we see is that the euro will strengthen, probably on the back of the dollar strengthening against the rupee. As we know that there is a cross relationship between the dollar and the euro against the rupee. So if the dollar strengthens, the euro will also strengthen against the rupee. But the momentum at which this will strengthen will be less, because internationally it will be the other way around. The euro will weaken against the dollar. So that will also have a effect in the momentum that the euro will play against the rupee, the strengthening factor, that is. So right now we advise our clients not to go much into the dollar. Similarly, into the euro. Similarly, for the pound also, we advise our clients not to have any overnight positions as such into the euro and the pound. Intraday, yes, we do see it strengthening a little bit against the rupee, that is. We also had yesterday the Italian bond rating, which has been cut by Moody's. Now this is further, like a negative impact. It will have a negative impact on the euro. So internationally, yes, the factors are there which show that the euro will go down. But however, due to our cross relationship, the euro will not show that much of a move in the domestic markets. Moving to the yen. Well, the yen has strengthened against all of its 16 major peers this week. This is primarily due to the safe haven buying. We are seeing that there is a lot of interest being shown in the Japanese yen due to the negative scenario that's going on globally and volatility that's persistent in the market. We expect the yen to strengthen against the rupee also, and we advise a buy at current levels for the yen at around 70.20. That's what the yen is trading, and we expect it to go to around 71.50 at least in the near term. This is primarily due to the Japanese economy is strengthening as such, and we also saw the Bank of Japan not having any major intervention into the market. They want the yen to strengthen for the immediate term because they want the imports, because right now they are focusing more on imports compared to exports. So they want the imports to come in at cheaper levels. So this is what's happening, and we see the yen strengthening also from here. We also had news from Chinese economy. Well, China grew at 7.6%, which is the lowest rate that it has grown in the past 3 years. This data is, you could say, bad for commodities as such, but however we saw commodities reacting in the opposite way. One reason why this could happen is, since the data was bad, now there is more anticipation or more hopes for China to come out with some further easing to boost the economy. If this happens, all the base metals, the base metal pack that will definitely go up. So this will have a positive impact on all the you could say commodity linked currencies, that is the Australian dollar, the Brazilian real, and even the Indian rupee. So it's, you could say, the chances of this happening are much less, but however we maintain our negative trend for the rupee for the near term. And probably if something happens, if something drastic happens, then the rupee will take a U-turn and we'll see it strengthening further to around 54 or 52 levels also. So well, that's it for today. Thank you.